All right, whether you win the lottery or not, you cannot avoid paying taxes.
Yeah, tax day is only 8 weeks away, and there are some new laws out there that you better be aware of.
That's right, and joining us now with some tips to tackle tax season. Had to say that slowly. David Rae, good to see you, David.
Good to see you as well.
Okay, so let's start with the write-offs. A lot of people don't realize they can utilize write-offs.
Well, you have until you file your taxes to actually still make contributions to your retirement accounts. This is one that people know about, but they do ignore. There's a lot of other deductions that people forget about or maybe don't keep track of. If you've done some charity work or donated money to charity, you might remember the money you donated, but you're going to really forget that you drove to that charity or you had a bake sale at the school. Ingredients for those cookies, it may sound simple, but it might actually add up.
Even the miles driving to the doctor.
Miles driving to the doctor, you can deduct as well.
Okay, so talk about some of the laws that may have changed since 2015 tax season when you know.
You know, if we're going from 2015 to 2016, there really weren't a lot of major changes. There was a lot of little tiny things like the mileage credit change. Like, so it really isn't going to change the big picture for you. So talk to your tax professional. Looking forward to 2017, where we've got some big promises coming. We've got Trump promising lower taxes for everyone. So keep your ear to the ground, and I'm sure it'll be big news here when he announces his plan.
And what about when someone officially becomes a senior citizen?
Yes.
Did things change for them?
You know, it's a much different process when you're retired or you're 65 plus. There are different deductions when you're 65 or older, so you do get a larger standard deduction. You also have a lower threshold to deduct medical expenses, and we all know as we get older we do spend more money on medical expenses, and if your income's lower, you may not have been able to deduct in the past, but you will be able to deduct potentially when you're retired. Also, things like required minimum distributions from your retirement account, 70.5, the penalties are huge if you don't take those properly. So make sure you plan ahead and start taking some money there.
All right, always ask a professional. Right, we need to get to some breaking news, David Rae, but financialplannerla.com.
Yes.
Thank you so much.
Thank you.
Thanks.
All right, let's